Hello guys, welcome back to my channel Commerce Viz. So in the previous video, I told you about the journal entries which the company passes during the issue of shares, and before that I also uploaded one basic, that is the introduction of shares. So in today's video, I will be telling you about the forfeiture of shares, when the company forfeits shares, when what are the entries which the company passes during when it forfeits the share. So let us begin. So first the question is, what is forfeiture? Forfeiture means to cancel. It may in Hindi we say it as jabt kar lena. It means that when the company makes the call and any shareholder fails to pay the call amount, then the company forfeits its shares. But before forfeiture, the company will issue the notice to that particular individual that if it does not pay the call money, it will forfeit the shares. So when that individual again fails to pay the amount to the company, that is the call money, then the company will forfeit its shares. Forfeit his share, means that the amount which it has previously received on that shares, it will keep that amount and it will not make further call from that individual. So I think you understood the meaning of forfeiture of shares. So the entries are not. Let us talk about the journal entries. So the first entry is when the defaulty shares forfeited. It means defaulty shares forfeited means the shares in which the call money is due and it is not received even after the company has given the notice. So when the company forfeits the shares, so the entry will be share capital account debited, securities premium reserve account debit, to calls in arrear account, to shares forfeited account. So, when the company, in the previous video, I said when the company receives the application money, the entry is bank account to share capital account. It means that the share account is share capital account is credited at that time when the company is receiving the amount. So when the company is cancelling that shares, so the in order to close the share capital account, it will debit the share capital account with the amount that it has called up from the shares. That is, if for example the number of shares in which the call money in which the individual has failed to pay is 500, and the company till that time has called rupees 5 from the public, so the amount that will come in this will be number of shares defaulted into called up capital, that is 500 into 5. Securities premium reserve account debit, it means that the premium money which it has not paid, if the company has issued shares at premium and if the shareholders has even not paid the premium account, then the securities premium reserve account will be debited. To calls in arrear account, the amount which the shareholders has not paid on the shares, and to shares forfeited account, it will be the paid amount, that is in from the called up portion. The shareholders must have paid some amount and the some amount must be unpaid, so the unpaid amount will be coming in the two calls in arrear account, and the paid portion will come to the to shares forfeited account. Hope this entry is clear. So next entry is when the forfeited shares are reissued. So it means when the company cancels the shares, then it can reissue it to another individual. So the entry will be same, bank account debit, because the company is receiving the money, to share capital account, and if the company is issuing that forfeited shares in at premium, then to securities premium reserve account. Even the company can issue the forfeited shares at discount. So the entry will be bank account debit, share forfeiture account debit, to share capital. The amount which the discount which the company has allowed will come in discount on reissue. For example, if the nominal value of the share is rupees 10 and the number of shares which the company is issuing is 100, so the company is issuing the shares at rupees 8. So in the bank account, 100 into 8, and the discount which the company has given, that is the nominal value minus the amount in which the company is issuing the shares, that is 10 minus 8, that is rupees 2, will come over here, and to share capital, the whole amount, that is 10 rupees. Okay, so the next is when profit on reissue of forfeited shares. If the company earns any profit, then that profit will be transferred to to capital reserve account. So the entry will be share forfeiture account debit to capital reserve account. So how to calculate that profit? It is very simple. I am giving you the formula. This is very easy and the most easiest method I can say you. So it is easy, like we have one formula for it, that is amount which we have collected on issue, amount which the company has collected on reissue, less called up capital. Amount collected on issue means the initially which the company has received from the public, and the amount collected on reissue, it means the amount which the company has collected when it again reissues that shares to public, less called up capital, it means the amount which the company has called up from that shares. I hope you understood the very basic things of the forfeiture of shares. If you have any doubt, do mention it in the comment section. If you like my video, then do like, share and subscribe to my channel. Thank you for watching.